Hello, I'm Michael Glass from the FXcast Market Analysis team. This is our FXcast Market Analysis trading plan. In each of our videos, we try to identify high probability trading setups. We'll evaluate the gold chart to see if there's any leading sentiment. We will create a low volatility watch list, an inside bar watch list, and we'll review the economic calendar to see if there are any releases that could affect our open and new trades. As always, please send your comments and feedback to analysis@fxcast.com. As usual, we are starting off with the daily chart of gold, and what we talked about yesterday, would the 20 moving average hold up as support, or would we go down and test the 50, which was basically where our gap up happened. And we can see, although intraday we did go ahead and swing down and air kiss this area, the buyers did come back in and defend that 20 moving average. A little bit easier to see on the 1 hour time frame, but we can also see one thing, and that is a lot of volume happened today. And why would you say there was a lot of volume? Well, because we pushed down and then the buyers brought us right back down, and so that took a lot of buying volume to get us from here back up to the 20 moving average. As we move over to the 1 hour time frame, we can see the consolidation that happened at the end of the day, but we also can see the volume pushing down and the volume coming back up. So there is a lot of volume defending the 1700 price level for gold, a lot of volume defending 1700. And you can see that our point of control dropped from 1850 down to 1750. So there's again a lot of volume defending this 1700 price range. So what we said yesterday was that if price could get above 1790, 1785, 1790, that we should fill this vacuum in here and test the resistance up at 1850. And we can see that here. This vacuum right in here is what we're talking about. So if gold can get back above 1785, 1790, we may easily push right on back up. But we'll see. We can also see that we are overbought, and so that's adding to this consolidation between 1750 and 1785. So a sideways consolidating for gold means what for our dollar currency pairs? Let's take a look. We can see on the daily chart, look what happened. This is where we were yesterday. We already had this drawn for you, and look at us come down, test our uptrend line, and it was defended. So definitely validating what we drew for you yesterday. So the question is, will we bounce and start heading back up, at least testing our horizontal resistance or our uptrend channel resistance? That will be the test. Some evidence for that. Well, on a 1 hour time frame, we can see on the 1 hour time frame, we can see that we are in a buy zone and we're below our long-term moving average. And we just crossed above our short-term moving average, which could mean that we're going to head back up. But we can see that the dollar remains in control. The dollar remains in control, which is what's pushing price down. However, at the end of the day, they both kind of took a dip down. So as long as the dollar is in control, price action will probably go sideways to down. But if we can get the pound to take control, that will support what we're seeing on the daily chart, which is a move upward. And we can also see that on a 1 hour time frame, being in the buy zone and below our long-term moving average. The euro dollar. Here on the daily chart of the euro dollar, we can see the story remains the same: sideways action, sideways action. And as we continue to say, stay out of it unless you're trading smaller time frames and you're really trying to trade this up and down action here. It's easier to see on a 1 hour time frame. We can see our support about 1.4350, resistance around 1.45. And we continue to just kind of bounce back in up and down between there. We really, although I have it at 1.44, we could raise it up to some of our other levels. But we continue to, just trade in and out of that. So what? Again, on smaller time frames, if you want to buy the support, sell the resistance, sure. But longer time frames, for the daily time frame, there's really nothing to trade here. We can see just fractionally that the euro took control, which is allowing this price action to move higher as the dollar spiked down and the euro spiked down into the close. But since the euro is in control, again, that's what's allowing the price to move higher, and we're even getting a little divergence there. But look at our wick here on this 1 hour time frame. We went right up to our line, and price pushed us right back down. So just like before with the pound, we needed volume to break through, and we got it, and then the volume disappeared, and we fell right back into the range. Same thing. In order to really get out of this range, either direction, we're going to need volume. And on the daily chart, you'll see we don't have the volume. Our final pair is the dollar franc. Story remains the same on the dollar franc, just inside bar after inside bar. That's a really tight range. Um, and again, so for our longer time frame traders, there's really nothing to trade here. Even our short time frames, these candles aren't even as big as the euro dollar. And not a lot of volume going here. Switching over to our 1 hour time frame, we can basically see that we're neutral, which would support what we're saying about the sideways action, and we're right at the long-term moving average. So again, kind of supporting the do nothing. What's important is that the franc took control just recently, which brought our price action right back down to our long-term moving average. And again, as we've been seeing, dollar averaging back down to our moving average, and the franc taking the move up, causing this divergence and the price action down. So as long as we have this range, a range within a range on the daily chart, we could draw, some more support and resistance lines just in this range and wait for the market to break outside. As we move to our economic calendar, we definitely had a week of light releases, not a lot going on, but we are ending the week with some things that need to be watched. We have the pound GDP, we have leading indicator for the Swiss, we have money supply for the European Union, and we have GDP and consumer sentiment for the states. So there's definitely some POW red starred economic releases. And don't forget, we also have Ben Bernanke speaking at the end of the day. So there's a lot going on that can be move the market. And for a light week, this may be in a week that's been a consolidation on pretty much all the pairs. This may be the time where we get a release that can actually break and bring some volume to move these pairs out of those zones, those ranges. We would like to thank you for watching our FXcast market analysis. As we continue to improve and make adjustments so that you're getting value from our videos, we want you to take the time to give us feedback, give us comments, send us questions about what you would like to see in our videos, and you can send those comments and feedbacks to analysis@fxcast.com, or you can post to our daily forum. Thanks, guys, and I'll see you next time.